Good morning, everybody. This is Dennis Wilburn with the How to Make Money Trading Stocks show. I'm with the Active Trend Traders. Today joining us from Switzerland is Michael Bishop. And,
Hello.
hey, Michael. Welcome. Mike Traeger is getting his hair cut. I told him he doesn't have much hair, so he doesn't really have to get it cut that much. But, we were both joking about, at least we still have hair to cut. As we're getting older and grayer by the minute. So Michael Bishop doesn't have that issue yet, but just wait, it happens to everybody. So I want to remind everybody that all materials presented are for training purposes only.
And he has almost no hair anymore.
Who has almost no hair?
I have the genes from my mom and my brother from my dad.
Okay. So just a reminder, all materials are presented for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. And then here's Michael's disclosure and disclaimer for the European market. And let's get going. Want to remind everybody that the Active Trend Traders is about training, and we like to provide our members with excellent training on how to do both technical analysis and how to interpret what the charts are telling us. We got really great feedback from many of the members on this past Wednesday night's session. It was about basically reversions to the mean, how to find the turning points. And like I said, I got some really good comments on that. If you have not seen that, and if you're a premium member, active or a early warning alerts member, you can go to the website and see the recording of that video and also download the slides. This week we're going to be talking about the hidden secrets of Fibonacci's. We are back on Wednesday evenings rather than Tuesday evenings due to a conflict I had, but again, we like to provide one just quick hitting, good, solid technical analysis training, and also training about the individual active trend trading system and early warning alert system. So here we are this week. Where were we last week? We're still in the relief rally. Guess what? We're still in the relief rally. And it's again hitting resistance. The big difference is the resistance that it is now hitting, prices are hitting, is at a higher level. What does this mean to us? It means that we need to be patient because, one, we haven't been getting any really good long signals, but at the same time, no real good short signals. S&P pushing into higher levels of resistance. The NASDAQ is also hitting overhead resistance, same for the Russell. One of the things that was quite obvious with the huge market reversal on Wednesday, I mean, just taking a look at that from a purely technical standpoint, with the start of the market on Wednesday after the down day on Tuesday, it really looked like the market was going to continue to sell off back towards the lower part of the little range that it's been trading in. However, right now, oil market is coupled to oil, and about an hour into the hour and a half into the trading session on Wednesday, oil started to rally, and the market went with it. And that coupling is still in effect. It happened to us yesterday, where the market just kind of hung out for a little bit, and then all of a sudden, bam, oil takes off and the market went with it. Interest rate expectations. Been looking at some of the economic details of some of the reports, and interest rates, the Fed is probably going to sit on interest rates for a while and not do anything. We got to remember that if there's a lot of talk out there about recession, which then could, in fact, if not handled properly, could turn into a depression, similar to what we had. And some proponents are actually saying it would be worse than 1929. Of course, none of us were around in 1929 that I know of. But Michael, So we are in a short-term uptrend within a longer downtrend as of today. Michael, what are the what's going on in Europe with regards to this aspect of huge debt, recession? I know Great Britain was trying to get out of the EU, which would probably really mess up the EU if they said, "Hey, we're out of here."
Yeah, I mean that's an exciting topic for sure. And the latest standing on this is that the Prime Minister made a good but not fantastic deal with the Commission,
Okay.
and so he could come back to London, saying he now supports being part of the EC going forward.
Okay.
And the day later, his party friend and maybe most most popular politician in UK, the Mayor of London, said, well, he is still against it.
Ah, okay. Interesting.
And they decided to ask to vote for this
Yeah.
in public very early in June, and it's exciting. It's
Okay.
exciting, and then the euro US dollar, that's for sure a topic that's important for the markets, plus oil, and so I think that the market will still be closely related to the US,
Okay.
and you see there is a lot of uncertainty.
Okay.
I mean, Wednesday morning was a big correction,
Yep.
and then US was kind of following, but I think then in the afternoon, late afternoon, the market went already strongly up. Is that correct?
It
Can't
did.
remember. Yeah, and then next day, kind of Europe was relief rally, and yeah,
So,
it's
yeah. Another thing that's happening here in the U.S. For U.S. citizens, of course, is March. Beginning of March through April 15th, of course, is kind of tax season. People will start putting those last minute funds into their 401ks, their IRAs, and all that kind of stuff. And so that could potentially, because what most people invest with, just a straight either a brokerage through mutual funds or whatever, then the mutual fund managers have to get that invested and all that kind of stuff. So this may work a little bit to buoy the market a bit, but we shall see if that is in fact the case. Again, I still go back to the chart of 2008 and say that we are we're seeing something very similar, not the exact same thing, but something similar to what we had back in 2008. So as of last week, the percentage of stocks above their 20-day moving average was sitting about 58%. Look where it is today. It has blown up to the top of close to the top of the range. It hadn't been up to this high since October, November of last year, and it can't go much higher. One thing about this particular indicator, it is not that predictive as far as this being a down, that this would predict a downtrend or a sell-off significantly. All it's telling us that it's more predictive towards the bottom, especially when you see these divergence. Those of you who were able to listen to the training on Wednesday night, you heard how Mike and I like to utilize that divergence. And again, that was a very excellent webinar. So if you haven't had a chance to see it, please take a look at it. But we are up into the prices where we have not been up for, oh gosh, pushing on, 5 to 6 months. And it's a perfect place where the market would say, hey, let's take a pause here, just slow down, relax, and pause, and then make a determination where it wants to go from here. So we've gone from the significance of this chart that Mike was talking about on Wednesday, of course, was when it came in and made this low on the percentage of stocks above their 20-day moving average. The market was coming down and doing kind of a double bottom thing. You come down, you come down, hit a low, it come back up, and then came back down and slightly undercut it right when this happened here. And so that was telling us that, and then it proceeded to gap up significantly and ran hard from there. So here's what we're talking on the percentage of stocks above their 200-day moving average. This is a monthly chart. And as you can see, we haven't had a lot of movement. About 5% of the stocks, have moved back above their, between what we had last week and what we have this week, about 5% of the stocks moved back above their 200-day moving average, which is a positive. At the same thing, we still haven't had any type of a trigger off of this to say, hey, we are going into a strong uptrend. The uptrend that we've been in has been quite steep, and that's something of always to be concerned about. When the velocity to the upside is quite high, they tend to flame out and then fall. So where are we sitting this week? As you can see, Dow Jones has added a little bit over 2%. Same thing on approximately 2% on the S&P, 2% on the NASDAQ. This was an incorrect number. I had to go back and change the math on it. So about 2% on the comp and close to 3% here on the Russell. It's kind of interesting that the Russell has kind of kicked into gear. And perhaps they're looking on the bright side that interest rates, any hike in interest rates will be delayed. The Russell has moved back out of bear territory. And so we'll see where things go from here. Let's take a look at some charts. There we go. Daily on the left, weekly on the right. And as you can see, what we've had here is this is the low I was talking about, had a divergence on the percentage of stocks above their 20-day moving average, and also on this chart here, TSI give a nice reversal. But there was no real reversal candles that were equated to that. And so it's made it just a real challenge to try to get in on this move. However, there's good news coming about that I'll share with everybody shortly. We see prices now pushing up. We're into the fib box. This is the fib box that measured from this high to this low. The 1950 level was the midsection of it. Up at the top is a 62.8% retracement. Then one of the aspects of fib retracements is once you break a fib box, it increases the probability that price actions will move to the next level of the fib box, or the fib, which in this case would be the 62.8. Now, does it have to make it all the way up there? Of course it doesn't. All it does is increases the probability that, okay, we're going to move on back up. Also, we broke out of this kind of double bottom base, broke out of that. And what's interesting, if you'll measure from here, let me get my other pen out here. If you measure from this breakout level here, measure this distance right here, and extend it from this midsection, it takes us right back up to right about the 2075 level. That's what we call a measured move. And now will the market make it all the way up there? You know, we don't know. But that is the measured move off of this box. It could make it only halfway. It could run into resistance at the 200-day moving average or the 100-day moving average. And so there's a lot of overhead resistance or overhead supply on the way up that that could slow us down. There's some there. And so it's about every 25 to 50 50 points, there's a level of resistance on the way up. Same thing looking over here. What are we? One of the things that was notable about the 2007, 2008 time frame, 2008 in particularly, is that early in January, we came back and found a level of support. Then it was retested several times as price action just kind of did this, moved back above the 40-week moving average, which equates to the 200-day moving average. And then in June, reversed course and fell, and that led to the catastrophic drop in the market back in 2008. Again, it's a similar type pattern, not exactly the same, but it is showing that, here we are. This is a short-term uptrend in the context of a longer-term downtrend. So we can get really healthy moves in a short-term uptrend on the S&P. Matter of fact, some of the largest up moves on the indexes tend to happen as relief rallies, within the context of a bear market. Joe, do you think a recession is likely? Oh gosh. Joe, in talking, with Mike Traeger and I do a lot of chatting about this kind of stuff about whether we do, whether a recession is likely. Let's just say that there's a lot of seeds out there that look like they could lead towards that. Part of the big bubble right now that nobody wants to talk about is a debt bubble. We have to remember that the market has been propped up in many cases, by individual companies buying their own stocks. I mean, companies are either borrowing through the QE process. They had lots of, they were able to get their hands on lots of cash. They borrowed and bought their own stock, holding up the value. Then secondly, what they did was they used their R&D money rather than investing it in R&D and or putting more people to work. They bought their own stock. And so one could say that there's an equity bubble and there is also a debt bubble. While the U.S. citizens themselves have been decreasing their individual debts, some of some of the institutions and larger companies have actually been increasing their debt. We may see some very dramatic things happen in the oil patch because of the debt some of these oil drillers have taken on. So, Michael, what's going on in Europe? Are the Europeans talking about the potential for a recession?
Yeah, it's difficult to say. I mean, what I think that U.S. has been leading the way in crazily increasing the debt, but Europe has followed, and maybe U.S. now the first severe alerts are coming.
Yeah.
And in Europe, there's still maybe the whole debt engine running a little bit smoother, but I think at the end it doesn't make that a big difference.
Yeah. One of the things that's kind of interesting that Mike and I were talking about the other day is that concept of in the headlines, they talk about that the majority of economists that work like for the Fed and are out there with the loudest mouths are what the Keynesian economist who, but Mike said that even pure Keynesian economist wouldn't be doing this thing where printing money and then go into negative interest rates and doing all that kind of stuff. He says it's kind of like a morphing of what the underlying economists had originally put together as far as how to stimulate an economy. And I've been here here in the States, and let me tell you, our economy has not been stimulated in the past. What was intended to stimulate hasn't stimulated, and while some of it, they changed the recording and how they report things so it looks good on paper, but I think if that ever starts catching up with us, Joe, just to give you a really long answer to a short question, is if when that starts catching up with us, look out below. I think if all those things do come together and finally start to crack, I think we will be looking at a pullback that will be even perhaps potentially, and again, this is an opinion, perhaps potentially more are more dramatic than what we had back in 2008. But we have to trade what the market's given us. And right now, we'll be talking about that. Here's the NASDAQ, guys. NASDAQ daily chart pulling up.
Maybe I quickly comment on this.
Okay.
I think in the US, as you said, the biggest concern may be the debt issue, or that surprisingly one of a well-known, very well followed company will really fail. I mean, Chesapeake or something like that.
Or Apple.
Then there's an avalanche. And in Europe, it's more that Greece will definitely fail, or big problems maybe in Spain doesn't look that good, and maybe another downturn in China, plus some really bad company news from the US, plus a big European bank that collapses, or Greece, then it doesn't look that good anymore.
Yeah. And so hopefully that answered your question, Joe. Probably more of an answer than you wanted from both Michael and I. Hey, here we are with the NASDAQ. NASDAQ has popped above, I always find this interesting, popped above the 50-day moving average and then has fallen back below it. We'll keep our eye on that for some potential. Does this mean we're going to, because this could well be a reversal type signal. We will keep an eye on that. I'll be watching. We have pushed above the 8 period here on the weekly chart, 8-week chart. But again, just for Dorothy, I drew in the Fibonacci's to see where we're at. And basically, we're getting really close to a 50% retracement from this high to this low here. If we in fact fail here, watch for a failure of the 38.2. If it fails again, that may hammer down against the moving averages and drop them down to where we could come back and retest the 4100. That fails, look out below for a complete retracement down to this low. We do have a level of support here at about 4,000 to be looking for. So Michael, and David wants to know, do you think Greece is going to fail again?
I mean,
he didn't say again. I said again.
Greece almost failed. I mean, it's now creative accounting.
Okay.
And Greece is, I mean, it's really not a big country. I mean, I think the biggest states of Germany are bigger, or especially have a stronger BIP than Greece altogether.
Yeah.
So it's once again more a political thing than than an
Yeah.
economic one, but yeah. I
So
mean,
so is Greece bigger than Dallas, Texas?
I would say maybe comparable.
Yeah,
I
interesting.
have to Google it, but
So then the other question is, do you think?
I will answer to this at the end of the show.
Okay. The other question is, even now that UK has got back and they're still conflicted about being in the European Union, David just wanted to know if you think that UK will leave. You know, that might
So,
be the catalyst.
also,
Hold on a second, Michael.
so for me, it's currently 50-50.
Okay. You know, that may, you know, we've been looking for a catalyst for more acceleration to the downside. You know, you never know how those things play out, but just think about it. I mean, if they in fact do leave, that would cause repercussions across, you know, probably global repercussions, and it could be quite interesting. So
Yeah, but I think if so, then it's a short-term phenomenon
yeah,
because it shows examples like Norway, Iceland, Switzerland show that you can still be part of or negotiate some economic deals without being really a member of the community.
okay. So I want to highlight and blow up this part of the NASDAQ on the weekly chart. Let's say we finish approximately where we are right now on the NASDAQ chart. This would be a hanging man-like candlestick, which can be considered a bearish reversal signal, and it's sitting right at the 8 period. The 8-week moving average. If it drops the 8-week, then it's probably going to, this may be just a slight 3-week relief rally and a roll back down. Again, those levels of support will come into play. What could also happen is we could see price acceleration up to the 20-week moving average, which equates to the 100-day moving average. And then get a pause. Or we could, you know, it could also go back all the way up here to this level, just above the 4,400 level, about 4,480, 4,490, and then ricochet down from there, and still be in the context of the longer term downtrend. So let's get out of here and go to the next chart. A lot of good questions today.
I mean, I have the feeling that if something drives the market or is leading the market, then it's still the Nasdaq titles.
Yeah. Well, you know, if oil basically, you know, because you know, one of the things from a technical standpoint, oil, of course, is still in a downtrend, and so we're in a relief rally in oil within a downtrend. We know there's support down about somewhere between $20 and $25. That appears to be the floor for oil, but you know, people are not, you know, it doesn't appear as if many countries are cutting their production, and so part of the thing that they were talking about oil this past week is that oil, the consumption of gasoline was higher than it was, but that's not going to last forever either. So here we have on the Russell. Positive signs on the Russell is that one, today's action may take out this swing high. And if in fact does that and closes above, but it's going to be running into resistance right at the 50. But if we get above the 50, then the 50 should turn around and this should become a support level for potential bounces and moves higher. Of course, if this reverses down from this, then we're probably going to come back in here and test at least the moving averages. Then we've got 1,000, that breaks, and it's just the domino effect coming the rest of the way down. Looks very positive here. We have a potential close above the 8-week, which opens opens the door for a little bit for us to move potentially back up into these other levels of resistance. So we see one here, which is already at that one, and then one again over here from this weekly swing low here. And let's draw a real quick Fibonacci on this whole thing to see what she looks like on this most recent move. The fibs are telling us that. Look at that. Okay. It's approaching the 38.2% retracement. This would be the fib box on this move from the 61, and the 50% retracement is just slightly below that swing low. Kind of interesting how that works. So we want to keep our eye on that, and then for those of you who are interested, you can do nope, wrong way. You know, oh, Dennis. You can draw your fibs the other way if prices come back down towards the bottom, and then you can look at, okay, where if it drops that bottom, where is it likely to go? Well, typically if it breaks out the bottom here, it's going to go to the 38.2, which of course is down here about the 850 level, which is around the level that it hit as a high back in 2011, which corresponds to another high that was back in 2007. Interesting how that works. So that's what we're going to be talking about on Wednesday night, is just the hidden, the secrets of the Fibonacci's and how to utilize them properly. So let's see. Okay, nothing in the Russell. Let's take a real quick look over here at the weekly chart on the Russell, just to see what it might be telling us from a monthly perspective. And since this is the end, well, Monday's the end of the month, to be more exact. Monthly wise, the Russell may be putting in a hammer, which is a strong bullish reversal signal. So what could it do over the next few months? It could make its way back up to the moving averages on the monthly chart. They have already provided us a bearish cross or a downside cross, just as it was similar that we got the 820 cross up here on the Russell on the weekly chart. Other than that, that's all we have to say about the Russell, but it is looking kind of interesting. The weeklies look like it wants to bounce up a little bit more, and so just keep an eye on if this fails at the 8, then we're probably going to rebound, come down and retest the 1,000 level on the Russell. So path of least resistance. Always like to answer this question. If the resistance holds, I think that basically our path of least resistance was back down, but it may be back down only as a short pullback, again within the context of a short-term uptrend that is still in effect. And so if the short-term uptrend stays in effect, then I would expect a rebound off of support and a rebound at least back up to retest resistance. And that's where I'm looking for some uniformity and some balance in the movements of the market, because basically what's happening is we've been getting these gap ups and they're darn hard to trade. And it's showing that there is a lot of volatility within the market themselves. And so short-term uptrend, relief rally within the context of a longer-term downtrend. And so here's where we're at regarding profits that have been booked year to date. Here's the individual strategies. We have $70,000 dedicated to strategy 1. It's down about a percentage. Strategy 2 is up about 1.65. Strategy 3 is up, have $20,000 dedicated to that. This is on closed trades, the amount that has come into the account on that. which then gets me to the future presentation events. BAM meeting coming up the first Saturday in March. Working on updating the training videos by the end of February. And one of the things here's what I basically wanted to, Mike Traeger and I've been working on some refinements to improve our timing specifically with all the strategies, including, and this is something we've been really working hard on, including second chance entries for the early warning alert system. We'll be coming out with some clarifications on what exactly that means, but we've gone back and taken a look, retested some things, and we're very pleased with especially the second chance the second chance entries, because one of the challenges we were having was basically we would get a preliminary signal. However, we weren't getting the follow-on solid proper signal to be able to get into the trade. And so we're going, okay, and we went, searching for, what is there out there, or how can we basically reinterpret what we're looking at to be able to provide solid second chance entries into the early warning alerts to take advantage of some of these nice moves that have been happening. And we have come across exactly how to do this. And the thing that was really nice about it is it spills over into the other strategies for the active trend trading folks also. So I'm really pleased about that. And I may have to increase the number, increase the how much we pay for the text alerts. That I pay the application folks for the text alerts, because I'm anticipating we'll start seeing some additional alerts, and also all three strategies plus the early warning alerts. So I just want to remind everybody that our motto is clarify, simplify, multiply. We base the active trend trading system on the 5 pillars of active trend trading: what to trade, IBD quality growth stocks, index ETFs. We provide when to enter, when to exit, what strategy to use, and what to expect. And of course, our basic strategies that are founded on the system of the active trend trading system. And if you are watching the recording of this and are not a member of the active trend traders or the early warning alerts, you can get a discounted membership just for the folks who are watching and also participate in the weekly How to Make Money Trading Stocks webinar. So, Michael, did you find out the answer to the question?
No, I have not found it because I have no figures from Texas.
Ah, okay.
Maybe in
no,
maybe it's in English Wikipedia.
Anyway, yeah, if you include Texas Fort Worth, it's a pretty landmass, pretty big area. So
I mean, the size is I think irrelevant. I mean, it's about the economy.
And so, okay, let's see here. That's all we have for today. See you guys next week. Keep growing the egg. Trade wisely. Trade profitably. And that concludes the webinar. But now I'm open to look at some stocks. And you just gotta say which one you want us to take a look at. Okay. Oh.
But now I can answer this.
Okay.
It's Texas bigger. Texas is GSP is even greater than Australia or South Korea.
Oh wow. Yeah, I know that their economy has just been absolutely going nuts, and it's not hooked to the oil patch the way quite as much as it used to be. So Trace, okay. Yeah, Trace, let's take a look here at what One, Facebook is putting in just a real, for lack of a better term, a real crappy pattern. I mean, big drop down, gap up with earnings, and isn't it interesting? I don't know. You were on the Wednesday night call. Isn't it interesting how those envelopes even work in this case here? I like and can also work off the intraday chart. So what are we looking at here? We are getting, yes, it is going up with the market. However, look at the volume fall off as it pushes up to make, new highs. How high is it going to go? Is it going to get up here to the 110 level? I don't know, but it is extended away from the 8 and the 20, and so I'd be kind of holding off on it. If you are already long Facebook, if you get a bearish, depending on where you got long on Facebook, if you get a bearish reversal candle and it kind of starts dropping the moving averages, that may be a time to take some profit off the table. And Dallas-Fort Worth is almost exactly 2 times the GDP of Greece.
I see. Yeah.
So anyway, that's what I'm seeing with Facebook. It again, it's back and it's got. We know that this level here between 110 and about 117-ish is a strong level of resistance. And since it failed to break out the first time, we may just be getting a retest back up to the breakout level. We'll stand by. I like Facebook. From a company standpoint. Let's see, EGRX. I didn't do that, right? Come here. Okay, EGRX. Okay, it's getting a real nice rebound on kind of mediocre volume, but it did get a nice rebound after earnings. It's back up to the top of the channel, and this is a significant level of resistance for it. And if it is reversing and turning back, into a more into a greater uptrend, look for basically a little pullback to the 8, at least the 8, and then a rebound from there. Because it may do one of these like it did over here. This is kind of a similar type pattern where it came up, hit the upper channel, then pulled back significantly, and then rebounded up from there. Looks hammer a couple of weeks ago in preparations for earning, pretty good earnings run. Not the weekly charts are not telling us a lot, except that we are getting some, some positive potential movement. Let's see, would Facebook be a good short candidate if it falls at the resistance level of 110? Hold on a second, let's get back to Facebook real quick. Yeah, I mean, I would draw, Tracy, just to answer your question, I would draw a trend line across the lows, and that would be kind of my line of demarcation. If it moves back below that, that would be a potential. But right now, it's still working as it is still in an uptrend, but that line has to be broken before it is officially back into a downtrend. What I'd really like to see is if it went up here and actually tested the 110 level, or somewhere between 110 and 115, and then as we learn on Wednesday night, then we can basically say, okay, that is a good area because it is very much extended away from its moving averages. Okay, Netflix. Make sure. Oh, Palo Alto Networks. We haven't talked about Palo Alto Networks in a while. Okay. Palo Alto Networks. Interesting. Okay, good buying. Accompanying the earnings. However, we have raced up, hit the upper channel and the 50-day moving average, and we are stalling right there. Are we going to fall back down? Don't know at this particular point, but we would like to see Palo Alto Networks, if it is going to go back up into an uptrend, to put in some constructive price actions here between, let's say, 130 and 150. We can come down here. Let's see what kind of a break we got here. Okay, yeah, that's pretty good. Yeah, so with earnings, and so it's digesting the gains from earnings, broke out of, so it has changed it has reversed this downtrend, so that's taken care of, but we don't know where it's going to come down to retest. So I'd be looking for a retest at a good level of support, and then look for some small body reversal candles. Who had that one? There, it's Eric. Okay, let's see what we got next. Netflix. Yeah, Netflix was looking really, really good for, you got this candlestick here. Based on this candlestick here, we went ahead and the next day planned a short trade on Netflix, half a position because of how the volatility of the market is going right now, just a half a position. And when it came up and hit off approximately the 8, that got us filled. And as we can see, look what's happened. Okay, Netflix has rallied back on up to a level of resistance. So what I'm looking at Netflix right now is it looks like, now that we've got these envelopes starting to turn, that it may be working on a constructive type base here. I mean, I could see this doing a couple of things. One, taking this as the high, that's the high, putting in a double bottom type base, or coming up, coming down, going back up, pulling back into a level, and this is where I would be looking at this, somewhere between the 90 and the 86, 87 level. If it stops there in this area here and then bounces higher, that would be a real good signal for us that it's time to jump on this bandwagon for a potential up move. Because Netflix is going to stay. Netflix is going to be Netflix. How many of you guys out there use Netflix? Okay. Let's see. So several of you do. I do occasionally. I'm not Netflix. Baidu had. I haven't checked Baidu since it did earnings, but I understand its earnings were okay. And yeah, Baidu. Check this out. It basically reported earnings, has gapped up. This may be the start of a new uptrend, because what do we have? We have a higher low, higher high. Well, not a higher high from this one, but now we have a higher high. And so this may be the start of a new little uptrend for Baidu. And so we want to wait for it somewhere. Look where it's gapped to, right up to resistance at the 200 and 100-day moving average, and it's just sitting there right now. Let's see what happens when the moving averages catch up. It's our TV in Spain. They have TV shows on there too, right? I mean, you can get the current TV shows on. And for those who were, like I said, on the webinar on Wednesday night, just look at what Mike and I were talking about with regard to some positive divergences here on the TSI, here a little bit on the, and the proximity to it being at the lows is defined by that envelope, and that while it did the same thing here, it would have been a real quick stop out, or you would have gotten a little bit of a profit, but how that lower envelope does provide support, but it's waiting for that positive divergence that provides the clues to now it's time to to look at getting long on this particular entity. Buy we did Southern. This is ooh. Okay, Southern Company. What does Southern Company do? I know it comes out, it pops up on a lot of lists. So what is, so if you look longer term on the weekly chart, you're putting in this huge big cup type pattern going on over here. Southern Company is not a big, a real big mover. It is still moving up this. It has not broken out of that, but it's in that little uptrend there. Today's candle does look like a bearish engulfing, so it looks like it may be getting some sell-off. However, the volume hasn't kicked up real high on it yet either. How are we doing time-wise? Okay. So this is the first, okay, this would be a warning signal. If it closes today close to its low or in the lower half of this candle, that will be the largest sell-off day in, it's larger than that day, larger than that day, larger than it's had for several weeks and months. And so that could be indicative of a short-term reversal, which could lead in fact to a longer-term reversal. We're going to look at, whoops. We know that it broke out of this level here, so you'd want to keep an eye on that 46.66 level. And it does not move a lot. I mean, even from this low here, it's about 13%. So it's not a big range kind of entity, but it looks like it does pay a dividend of about 54 cents per quarter. That's pretty good. So yeah, it's looking a little bit weak. TFX. What is TFX? Teleflex Incorporated. Nice gap up on earnings. It gaps above the break. For me, Tracy, I'd be looking for it to do something constructive now. I can draw in, I can draw in my price level here from the breakout. Just let that, and then see what it does. That's a strong level of support, and we can then see what happens as price action makes its way back and consolidates or actually goes back and tests that area. That's when it becomes interesting to me. I would not be interested in specifically shorting this stock or anything like that, but I'd be looking for the pullback into this region and for the moving averages to catch up for a potential bounce. Does that work? Okay. And okay, let's do AppleSoft. I say that jokingly because now that Apple is so big, and as part of the Dow now, that it is going to do the same thing that Microsoft did many years ago when it joined the Dow. It turned into a Dow stock. So, oh, what are we looking at here? We are at a level of support around the $92 level. When is earnings? We just had earnings here. So I actually gapped down earnings to support and is bouncing back up. Yeah, I mean, it looks like it's trying to, find a bottom in here. And let's see what kind of, and Apple has stopped moving the way it did. Because, it's going to range of about 9.65, 10%, let's say. And let's see what happens. It operates. Apple does like to get in ranges and stay in those ranges for sometimes weeks. We see that here. We see that here. And we may be seeing that it's transpiring here. Right now, Apple is in a downtrend. However, it looks like it is trying to find a level of support. So is $92 or $90 the bottom for Apple? We shall see. Or will it literally just wedge back up and then drop again? We'll see. I wouldn't be looking to buy Apple myself just simply because I think it's growth days, because it is such a large company. It's a great company, but because it basically has fallen out of the, oh good, market's going down.
Really?
You hear that? Yeah, that's one of the alerts I have that tell me. I have sound alerts on my, and
Oh, I would more say that the market goes up.
well, no, I mean, it depends on where you want it to go, and right now I want it to kind of go down. Uh,
Okay.
so okay, let's see. I think we are at the end of our time. Any
By
more
the way,
stock?
what
Oh,
you see
somebody.
that is very defensive conservative stocks are scratching on their all-time highs, like
Ah,
Johnson & Johnson or what's CVX? That's Clorox or something like that. Right?
yeah, yeah, yeah. Here's J&J. Yeah, look at J&J. It's pushing up here toward, like you said, towards its up all times high. A couple of things I was looking at. One is CAT. If we go into definitely go into a global, continued global slowdown, we can look for CAT, even though it's still down a lot from where it was. We can look for CAT to potentially, it's in a nice downtrend, just down
Mm.
up to the moving averages and down, up to the moving averages and down. And so CAT, what was that other one? CLX? Is that Clorox?
No, Caterpillar I did not mention. I think that I mentioned Clorox and Johnson & Johnson, I think.
Yep, Johnson
Right.
Johnson Johnson
I
Johnson. I
just
showed. Yeah, look at
tell you.
Clorox. Clorox is. Let's just whip over here real quick to a weekly
There are
chart.
a couple of short candidates there. Just
Look
bookmark
at
it.
that. I mean, this goes back.
Then
Uh,
CL, the same. I just closed that one. And
yeah, I'm looking at 20 months, 20 years.
MAT,
What's that?
MAT, that's the Barbies, I think. Mattel, I think.
Mattel. Yeah, Ken and Barbie.
Yeah.
I understand. I
Yeah.
understand that nowadays they're going to just.
Triple M, the same.
Yeah,
Yeah,
yeah. Yeah.
these three.
Yeah, Mattel can be kind of an interesting interesting stock to trade because it gives pretty good moves, but it runs in a pretty wild range. Uh, but I think Clorox is the one, Michael, that really provides what could be more defensive than a bleach company, and
Mm,
it is at a all-time high, and
mm.
so that's kind of interesting. Okay. Hey guys, that's in case there was a question. Eric says, please discuss some of the stocks you are watching. Some of the stocks that I am watching are, let me get rid of that. I am watching currently Tesla. Okay. And which Tesla on a daily chart is looking like it is back up to the top of the channel. One thing I like about Tesla, just to keep your eyeball on it, is it trades in such wide ranges that just picking up a couple of trades on this every once in a while can do really good things for your account. But it's a timing thing. If you get on the wrong side of the trade, you're going to die. But Tesla is one that I'm watching. What are some of the other ones? Amazon. Amazon. Again, Amazon, it's in a downtrend. But again, Amazon moves. Okay, it's moved $9 today. And so I like that. Amazon has moved almost $30 for the week. And so the market right now has been providing us kind of a hit and run kind of market where you want to get in and get out very quickly and limit your downside, exposure. And then the other one I like is right now is Netflix. I do like Netflix. And we'll see what happens with Netflix going forward. And then some of the stocks that are going to be having earnings this week or in a couple of weeks is DG, Dollar General. It is right back up to support resistance, and so it may not go any further than where it's at. But these are some of the AVGO earnings on the 1st, I do believe. And it didn't move a lot, so I'm not expecting a lot. I'll be looking for, and then Ross Stores. Again, it too had a pretty nice move off the. It would have probably been a good trade at the very beginning of the week, but it hasn't moved a lot. But in these pre-earning moves, well, we're looking at somewhere between 5 to 15%, and then we close out prior to the earnings report. And then LinkedIn, David brings up LinkedIn. LinkedIn is kind of interesting. It basically, apparently they came out with their first TV commercial yesterday. And so it's, clearly, really sold off. Where's it going to go from here? Is it going to go back up to the top of this candle, or is it going to start eating its way back up into the gap down from the huge gap down from earnings, where it lost almost, it almost dropped 70, 80 bucks. And then 90 bucks over after that. So, hey, with that, we're going to call it a day. Michael, thanks for joining us. Enjoy the rest of your weekend.
I will. Thank you.
And wanted to say, guys, stay tuned with the active trend trading and the early warning. These secondary entries is going to be, second chance entries. I think you're going to really appreciate. So with that, I'll call it a day. God bless everybody.